You lost money on an investment inside of your brokerage account. Did you know that that may actually save you money on taxes? Now, to know about capital losses and how to actually use those to your advantage inside of your brokerage account, you have to actually understand how the taxes work on capital gains, interest, and dividends. So, if you haven't already seen that video, comment brokerage tax and I'll be sure to tag you. Let's get into it using an actual example. Let's say last year on December 1st, so December 1st, 2025, you bought 2 shares of Tesla stock and this was at its peak price. It was around $490 per share. So that is your purchase price, otherwise known as cost basis. So that's a total of $980. Now, Tesla stock has been declining, and a couple weeks later, you're completely over it and you want to sell. Let's say that those shares are now trading at $440 per share. So now you have a balance of $880. Remember, you bought the 2 shares for a total cost of $980, which was your cost basis. Now you're going to sell at $880, which means that you have a total loss of $100. Okay, I'm hoping that that was basic enough that we're still on the same page and you're following along, because here's where it actually gets beneficial to you from a tax standpoint. And be sure to stay watching until the end, because there is one scenario that could completely ruin your plan of writing this off on your taxes. Okay, let's go through 2 different scenarios here. Scenario 1, let's say that this Tesla stock in this transaction was your only stock in your entire portfolio for the whole year. You can use that $100 to write off against your ordinary income, think like a tax deduction. Scenario 2, let's say you also had Google stock and you sold that for a $100 profit. So now you have a $100 profit from Google, which you would ordinarily owe taxes on that, but you have this Tesla loss that's $100. You can use those to directly offset each other, therefore eliminating the taxes you would have owed on the Google sale. This is called tax loss harvesting. Here's the one thing that may ruin this whole plan for you. It is called a wash sale, and there's way too many nuances to get into in this video, so be sure to follow along for the next part.